This is Nerd Stock Talk. We're here every Saturday at 8 p.m. Eastern Standard Time. With us is we got JP Wildman, our Renaissance nerd here. All right, and we got here Michael James, the Ranger of Dark Hollow, another nerd. And I am also here as Barney Smith, another nerd, and we are here talking about all things nerd stock talk. So thank you once again. So JP and Mike, thanks for joining us. This is going to be fun. So what we're going to do, we're going to jump right in just to kind of reframe. We're going to talk about how our stock picks did last week. Then we're going to talk about kind of some our due diligence on what we do and how we kind of pick our own stocks and what we do. And then we're going to talk about what our picks are going to be for next week. So so this is okay. It's live. I should have talked to you guys before we went on the air, but I had another idea. So what about? Because I'm thinking you're looking at that. You got your longs, you got your shorts. So I'm wondering, do we want to also kind of talk about what would be what's our pick for the next 3 months and the next 6 months, and maybe kind of look at more down the line. That way we don't have to keep flipping stocks every week or stuff like that.
Yeah, because I don't. To be honest, I don't really play weekly.
Right.
Stocks. I mean, there might be a stock that
you're looking at.
There's an opportunity to jump in and ride a wave, but
right.
Yeah, it's mostly longer plays.
Okay.
I'm really into the leaps, like the
right.
2-year calls.
Yeah.
Nice.
So what we'll do then? How about this then? So then what we'll do at the end of the episode, we'll pick what we're looking at next week, and also what's your maybe 1 month, 6 month, and 1 year looking at. So would that work?
Sure.
Okay. All right. So what we're gonna do, I decided we'll do bronze, silver, gold based off of what the picks were. So we're gonna pull up last week. So the bronze goes to Mike. Mike, do you want to talk about your pick from last week?
Yeah, man. So GameStop, right? Like we were hoping that it would rebound and the squeeze would squeeze, and that didn't happen. And I lost $2,200, and it stayed around 50, and I became paper hands. I was like, no, I'm done with this nonsense. So I got out of it because I couldn't deal anymore. But
so
yeah.
So just so you guys know, so there's a few terms that are in the day trader community. There's paper hands and diamond hands. So paper hands are people who are basically will drop out a hat, I guess. I don't know. It's like they're less inclined to hold.
You can't hold anything with paper hands. It just falls right through.
They fall right through, yeah.
Yeah.
So Mike, you said you sold your GM. You sold your
GME.
GME.
I sold my GME. I sold my GME. So at one point I had like $3,000. By the time I sold it, I was down to $830. I had $3,500 at one point, and then I sold it. It went down to and I had like $800. Jumped into a couple of other things, and I'm up like $50. But
buy high, sell low. That's a good strategy.
That's exactly how you do it, right? I think that sometimes I have a little bit of dyslexia, so I forget the wisdom of. Anyway, it was a market strategy thing, and I really don't think that GME is gonna do this short squeeze thing.
We'll see. All right.
I could be right. If I'm wrong, Barney's gonna drop off a car or something at my house.
You're gonna get stung twice if you're wrong.
If I'm wrong, like if it actually squeezes, I probably will say some bad words, like really, really loud bad words, not appropriate for a family show.
Yeah. I just want to reiterate that you don't actually lose any money in the stock market until you sell.
That's right.
True.
Yeah.
So yes, I actually lost money in the stock market because it's called locking in your losses, right? I mean, when you sell something in the stock market, you either lock in your losses or lock in your gains. And I was lucky enough to do both in the past 2 weeks.
Go, Mike. All right, we'll jump right in, and so let's talk about JP's picks. JP, how are things going with Canoo there? That's not as bad of a loss as.
Yeah, Canoo is. It depends on when you pulled the ticker. It's pretty much flat. It's no news. There wasn't any expectation that Canoo was going to do a whole lot. The big catalyst for Canoo is a deal that's rumored to be going on with Apple and their car. And so until that news goes either in Canoo's favor or not, I don't think Canoo's going to vary too much from its current price.
I really hope that news happens within the next week because I currently own some Apple calls at 145.
Good. All right, and I think I'm gonna write this down as a schedule. I think one of these episodes we want to talk about options and calls. I think that would be that's kind of like a second tier, kind of like a little higher up. You said as trading goes, it's not really.
Yeah, it's a little more complicated. It's really easy to lose a lot of money if you don't know what you're doing.
Right. All right, and I will talk to. So last week I was the one that I didn't even get in on the list because I didn't get to give you my picks last week. So I said my weeks to remind you all was Tencent and Activision Blizzard. Both Activision Blizzard is getting up a little bit higher because of its Q4 call that was the week before. Not this past week, but the week before that. So it's still kind of riding up. And as I said, BlizzConline, which is this coming week, I think we're going to see a spike in that. And Tencent, it's a steady one. It steadily goes up. So if anybody's in Tencent, just to remind people, it's a mobile gaming app platform. They're the ones that are based out of China that has a lot of pretty big mobile app games. Mobile games. So that is, I think that's going to be a long-term investment, and I've put money in that for the past year, and it's gone up a little bit at a time. So I'm going to keep my eyes on that. We had Anthony Daniels just said he's like in Bumble and DraftKings. That's his pick. So
there you go.
Yeah.
This Anthony Daniels fellow.
Yeah, and Bumble just got released. That would just became that's new as of this past week. It was put on.
Bumble is a dating.
It's a dating app. Yeah.
There's something about that. Yeah. But the thing is, Bumble's neat, but it is now. So the big news, right, was it is the second largest dating app in that space. But the largest dating app in that space are all the things owned by match companies. And they have 80% of the market versus the 20% that Bumble's holding on to. So I would be shocked.
Is what you're saying.
What's that?
I said there's a lot of upside potential is what you're saying.
I think that's kind of like saying, hey, Job Lots, Ocean State Job Lots is a discount retailer who owns a tiny percent of the market. There's a lot of room for them to grow because Walmart owns the other 80%.
Yeah. It looks like it was kind of an off week for us a bit, so we didn't have any.
If we go by percent of change, right? So if we work up of delta, then I totally won.
Due diligence. So we always talk about, in the Reddit chats, people say, do your due diligence. Don't take it. This is not advice. People would always end up saying, these are the things that I'm thinking about. This isn't advice. So I do your own due diligence. So with that said, starting with Mike, what do you do to pick stocks?
So I've got a dartboard. And I've got some dice, and the first thing I do is roll the dice, and then I throw the dart with my eyes closed. So no, realistically, I subscribe to a couple news aggregators. I get news from the New York Times every morning. I get news from this company called Morning Brew that does a newsletter. So I look at the news. If there's news about something that I'm interested in, I do a little more research, and then I look for something that I think is undervalued. I don't spend a lot of time looking at the hard financials of a business. Basically, it's uh, what I think the potential in a particular investment is going to be, and then I buy it or I don't buy it, or I watch it for a little while and then I buy it. And, that's kind of what I do. Either that, or or JP messages me and is like, "Buy this thing now. This is not financial." And sometimes I do that, but for the most part, it's I pay attention to things that I know about. I know about technology a little bit. I know a little bit about cars, and when those two things come together, it's sometimes good.
Yeah. All right. I'm fairly new to this, less than a year. I started doing this. I was one of those guys that jumped on it as soon as the quarantine happened. I was like, well, all right, not much to do. So I got I opened up my Robinhood app, started an account. And like we talked about in previous episodes, is when you're new to investing, look at the things you already know about. As we said a couple of weeks ago, last week, if you know video games, look at Nintendo, look at Sony. If you know about toys, look at Hasbro, look at some of the other ones that produce toys. And if it's movies, if you love movies, if you love comic books, you look at movies. You look at AT&T, Viacom, Viacom. You look at you look at Disney. You look at Netflix, and see. And then what you do is you put in that value to say, this is what I think is going to still be around, or this is still going to do a lot of good stuff. Because you'd be surprised is that the more you read about the things you love, the more you know about it. So you know that, did you hear there's a new line of action figures coming out here? Disney just purchased, Marvel Studios. These are things that, because if you're a fan of these areas, you're going to hear about it before the general public will. So you, in a way, being a fan of a certain hobby or fandom or nerddom, you're going to know about that stuff more than the average consumer is going to be.
What that'll allow you to do is filter through, so when I say I look at news aggregators, there's all this information coming at us all the time. And the more you know about a specific topic or industry, the more you can kind of read between the lines on a lot of the news and say, okay, what's gonna go on here? Because the companies that are a safe bet are a safe bet for a reason. They're gonna grow slowly over time. Like if you like entertainment, sure, buy Disney. It's you're not guaranteed to go up, but the odds are good that it's gonna go up. But when you start looking at these industries and you start looking at stuff, hey, maybe I should look at what's a good IP right now. There's big news about Amazon's putting out a television series based on the Wheel of Time book series, and that's great. But who gets paid for that too is Tor Publishing, who owns the Wheel of Time book series. So you're going to be able to what you want to do, or what I do, is I drill down, right? I look at, okay, yeah, for sure, right? Apple, great example. Like we've talked about Apple and Canoo making an electric car together. That's fantastic. Apple's $135 a share right now. Canoo is, JP, what's Canoo at right now? What did we just see? Like $18?
$16. $16.
So the more shares of something that you own, the more you're going to profit from growth, and actually the more you're going to lose with a downturn, which is my reality this week.
Yeah, and then from there, once I kind of dip my toe in where I for instance, like when I learned about Tencent, for instance, I learned that from from kind of like looking at video games, and that's how I discovered Tencent as a thing. Then I'll see like, people who bought this also have this in their portfolio. Then I'll check them out, and then I probably make the mistake that JP taught us not to do last week when he showed us how to read charts. I'll pull up the stats of somebody and say, okay, how are they in the past week? How are they past month? How are they past 3 months? If I see kind of an steady increase going up, then I'm like, all right, so there's a chance this is going to keep going up. So unless it's going up and down as we talk about buying the dip, that's how I personally do it. And the reason why I want to do this show is so I can learn to be a better investor myself. So JP, talk to us about how do you do your own due diligence?
It's complicated. I have a few different pots of money, I guess I'll say, of capital that I invest in different ways. So I've got my long-term super safe investments that I just, workhorses we'll call them, that every financial advisor will tell you is great to be in, your ETFs and your blue chip stocks and such. Mm-hmm. And then I have my riskier plays, and then I have my options and calls. I'll dabble with penny stocks here and there, and I've got a little bit of capital set aside to just be opportunistic with, and sort of keep an eye on the chat rooms and the Reddits and the things, and just, you start hearing buzz about a stock, that usually means the stock's going to go up. I'll buy it. I'll ride the wave. I'll get out when where I think the top is, and start over again on a new stock. But in terms of due diligence, I kind of look at it as 3 or 4 different tiers. You've got the broader market. One of the programs I like to listen to is Marketplace on NPR. That's usually gives you a good idea of where the market's going the next day or two, whether you're bullish or bearish on it, what interest rates are going to do. All those things sort of affect the broader stock market. And, if the market goes down, all stocks are going down. So that's the first clue. And when it gets down to the individual stocks, I look at the numbers. I look at the all-time highs, the all-time lows. Is that stock near the all-time high? Is it near the all-time low? If it's near the all-time low, that's a good buying signal, but that prompts me to investigate a little further to find out why it's near the all-time low. Is there some reason for that? One stock, as I'll use as an example, is Rolls-Royce, the jet engine maker. They are trading near historic lows right now, $1.30 or something, $1.40 a share. Right. It really looks like it's a great buy. However, there is no catalyst for that to turn around until after COVID ends and airline travel returns again. When that does, that stock's probably going to jump back up to the $15, $20 range. So that's what I have in my watch list. I'm just kind of waiting for some positive news. Even if I can get in at the $2 or $3 mark, I think there's still some massive upside to be had there. But right now, it's not a good buy to get into. But that's the basic gist. Is you really buy the rumor, sell the news. When you hear rumors about a stock, that's usually where all the upside happens. And when the actual news comes out, you don't tend to see as much of an upswing. Most people are getting out at that time because the profits are baked in, so to speak.
I've never heard that before. That's a cool. Buy the rumor, sell the news.
Yeah.
Well, and so part of that is where you get your rumor from, right? I get my rumors from news about other things.
The mainstream media, one thing to remember is that the way they make money is advertising. And so if you're watching like the CNBCs and the Wall Street Journal, Market Watch, all those places, most of the stories they do are actually paid advertisements for stock tickers. So you have to be really objective with what you're reading and really look into what that article is telling you.
There's also that sense, even with that though, is also using your own due diligence to kind of figure out what's going to be, because keep in mind the stock market reflects what's going to happen, not as reactive as it is to what's going to happen in the future. So and then use your own due diligence and your own ideas of like, okay, where do you see, where's your confidence in the next 6 months, or where's your confidence in the next few years? When we were talked about a couple of weeks ago about like electric vehicles, GM said they're going all electric by 2050. So hearing some of these things about, where the nation, where the country, where the world is heading in a certain direction, put your confidence in that. Just, do you believe it's going to happen, or do you believe it's not going to happen? So there is a bit of.
And again, it's how does the news that GM is going to all electric vehicles by 2050? How does that affect anything, right? How does that affect GM? You know what? I don't care how that affects GM, because that's the news, right? That's when you want to get out. But who's GM partnered with? Like, what kind of noise has GM made about, what the software is going to look like in their vehicles? Who are they looking at for their batteries? Who are all of these things are kind of part of it, where you go, I see this news, but that's not overly interesting to me. I'm more interested in how does that news affect something else, and it's using that creativity and saying, oh yeah, I think that, something cool is going to happen there.
What are you looking at for next week, and what are you putting your money? What's your investment for the next month, 6 months or so?
So next week I'm trying something different. I read an article, very interesting analysis that someone did, that over the last year, someone plotted out the price of the S&P 500 at close versus the price at open, and they discovered that overnight the S&P 500 goes up more often than not. And so if you had bought shares of the S&P 500 ETF called SPY, which is a group of all the shares in the S&P 500, if you bought that at the end of the day and then sold it immediately at the beginning of the day, over the course of the year, you would be up 517%.
Wow.
Yeah. And I think overall the S&P 500 is up maybe 15 or 20%. I'm not sure. But it was a significant difference. So last night, at 10 minutes to the closing bell, I bought one share of SPY. And this morning I set a sell order for immediately on Monday morning. My plan is to run that for the rest of the week and just see what happens.
Okay. All right. Interesting.
That's cool.
All
Nice.
Right. All right. And long term, what are you looking at for the next few months?
Next few months, I am really tied up in this Chinese battery maker called CBAT.
Okay.
I've got a bunch of calls for $17.50 that expire in April, another set that expire in August, and another set that expire in September. I don't expect that CBAT will reach $17.50, but at the time I purchased them, CBAT was $4 a share, so they were very inexpensive. The closer CBAT gets to $17.50, the more money those calls are worth. So that's what I've been playing for the 3 to 6 month time range right now is CBAT.
Okay.
They're a very large tabless lithium battery maker.
Right. Okay. Yeah, you guys are gonna have to teach me about these options and calls. I gotta figure that out.
You better talk to JP. I barely understand them.
So Mike,
so short term, I bought some Apple calls that expire on March 5th, so like 3 weeks from now. I bought them at 145, so that's kind of my short term. So I've got Apple 3-5 calls at 145. I've got 4 of them. So if Apple stock doesn't start doing some fun stuff here, I'm gonna take a bit of a bath.
What's Apple's price right now?
135. But they do have a dividend coming up, and I've heard some rumor about some that they took. So they kind of took a bigger hit than they should have with the meme stock mania stuff. I mean, Apple it's huge. It's a great company, and I could get the calls pretty cheap comparatively. So I picked them up. They're a little shorter than I like, but we'll see what happens by 3.5. So they're Apple 3.5.
You're going to want to sell those within 2 weeks.
Yes.
The extrinsic value really starts to decline the closer you get to expiration.
For sure. Yeah, I'm thinking that like next week, maybe the week after, I'll sell them. But they definitely got to go before. They got to go before.
Well, I'd take advantage of any bubble that occurs between now and then.
Yeah, that's my plan. They've got a dividend payment coming up, and I think that's going to pop the bubble a little.
That should cause a run up. Yeah.
This should cause a run up, and I'll probably bail out then. Midterm, I've got Senseonics. I got 100 shares of them. They're at 420. I had some, like I said earlier, I had some calls for them at $4, which was nice, but I paper handed those calls. Anyway, I think that they're probably going to be up over $10. I've got 100 shares of them. I own them for like $3.60 or something like that. I think they're going to be around $10 by the end of April. And then I'm back in BlackBerry. Nissan just said they're going to partner with them for the software for their electric vehicles. I think that BlackBerry is the long-term play for the EV market that's affordable to get into, because they are. I think they're gonna have the software that all the EVs run.
Wow. Okay. My picks here. I have my to buy list right on here. So I found one. So as I say, I'm still looking at Activision Blizzard for next week. I think that's going to get a little bit higher. That's my stock to watch next week. My long-term one that I kind of fumbled around and found, which actually was going up pretty well so far for me. And I'm probably going to keep this one. It's called Novin. This past week when I got it, it's already gone up 63%. And
good for you.
It's $248 at $2.48 a share right now. So, and it's basically it's part of the medical biotechnology companies. So I'm gonna look at that. I might put some more money in that one and see what happens. So those are my two picks for next week. So cool. All right. Well, thank you once again for joining in. As I say, so for those that watch us or hear us, we do this live on Saturday nights at 8 p.m. Eastern Standard Time. If you're watching this as a video later, please don't forget to hit the like and subscribe button below. And remember that we are not financial advisors. This is purely for entertainment purposes. So this is another episode of Nerd Stock Talk. So thank you very much, everybody, and we will see you next week.